Welcome back to Fast Money live in Miami Beach from the iConnections Global Alts Conference. It is a key week for tech earnings. 5 of the Magnificent 7 tech stocks reporting quarterly results this week. Apple, Microsoft, Alphabet, Amazon, and Meta Platforms all on the calendar. Brad Gerstner is known as an early investor in Meta. He is the founder and CEO of Altimeter Capital. Joins us now on set. Brad, great to have you with us.
Great to be here.
We are talking about the market's just propensity to go higher. So what does that mean in terms of the setup for these big tech stocks?
Well, I'll tell you, it's a lot. The markets are a lot more heated up than it is right now in Miami. But listen, we've come a long way quickly. Remember, the first week of the year, Mag 7 was down and everybody was panicking, right, that the run was over. And then we've had a 30% move out of NVIDIA higher. We've had a 10% move out of Microsoft higher. So we've had a big bounce off of the bottom. And I think this week they're going to have to deliver on earnings or beat earnings in order to just stay where they are, right? And so I think on balance, if they were priced where they were in the first week of the year, I think you could make some fast money this week. But the reality is the month has already made some people some fast money. NASDAQ up 4%, a lot of these stocks up 5 to 10%. So, I wouldn't be surprised to see a little breather this week.
So it pulled forward a lot of enthusiasm in a short period of time in a handful of names that did a lot of the heavy lifting last year. When I think about last week, think about like Tesla and the positioning of that. The stock had sold off 20% into the print, so expectations were really low. When they didn't deliver, the stock was down 12% the next day. So when you think about a Microsoft, to your point, has rallied 12% in a straight line in 3 weeks, expectations couldn't be higher. The stock closed at an all-time high. It's trading at an all-time high valuation. It wouldn't take much to have that stock down 5-10% over the next few weeks.
I mean, listen, I think it would take a lot for it to be down 10%. The problems at Tesla were idiosyncratic to Tesla. It was a disastrous call. I saw a note out of them today. I think that's beginning to get constructive again. I think it looks interesting at these levels. But Microsoft is the leader, cloud leader in AI. I don't expect a blow-away print, but we expect them to beat this week. I think the beat will be enough for it to hold its head, but it's going to take a really big beat in order to get it moving higher after a 12% move, to your point. And if they don't, if there's a disappointment, like I say to my team, if your numbers are going higher, the stock's going higher. The problem with Tesla, its numbers went lower. So Microsoft, we'll see when they report. I don't expect it to be a big beat, but we do expect it to be, continue to be constructive.
Today's the 29th. Thank you, Guy. The 22nd Supermicro computer guided for the quarter, and the stock was up in a sort of a parabolic way. They came out with earnings today, the upper end of guidance, probably higher than the top end, and the stock's up again. Those are parabolic moves that we see sort of more towards the end of things than the beginning. However, maybe this is the start of something. So how do you wrap your head around something like that?
I mean, listen, Supermicro took their full-year guide up after the bell today by 40%. 40% to $14 billion. So that's why you're seeing these moves. Plus, as you and I were discussing, it's a heavily shorted stock in the hedge fund community. So the stock's up 75% this year on numbers that are going a lot higher. This isn't about just wild multiple expansion, right? I think what you have in this moment in time is a platform disruption, an AI super cycle. It's very difficult to forecast, right? Think about NVIDIA at the start of last year. Data center revenues were expected to shrink by 6%, right? We thought we had huge variant perception by being up 16%, and it ended up over 25%. Right? That is a wild difference between the beginning of year forecast and the full year forecast.
So Supermicro is not a sign of an AI bubble or bubblicious action. It's just, it went up and now hedge funds are short. So this is squeezy sort of action that we're seeing in today's session. But in terms of the AI leader being NVIDIA, perhaps, is that still cheap in your view?
So NVIDIA ended last year at 20 times earnings. Its lowest multiple of earnings it's ever traded at, despite the fact that it's the purest play AI name in the space. It's traded up to about 26 times. So there's a wall of worry, right? The number of times I heard from my investors and others, it's doubled over the course of the last year. We need to sell it. For us, we pay attention to the numbers. Our numbers are still well above the street for this year. I think there's a lot of doubt. The common discussion at the end of last year was that they pulled forward all the AI training demand for the next several years. That's not what we see when we talk to customers who are putting bigger orders in the order book. So we think those numbers continue to go up. And back to Supermicro, they're building the servers for folks like Meta, right, which leads to this increase in revenue. But let's be clear. If you miss your numbers, if you're Supermicro or NVIDIA or Microsoft, if you miss your numbers with this level of expectation after these moves, you're going to have a Tesla-like effect.
So let's talk about some numbers. AMD tomorrow after the close, right? So everyone's excited now that they are going to have a competing product to NVIDIA. We know that the demand right now is off the charts here. Here's a company that's expected, consensus right now, to grow earnings 50% this year, grow sales 20%. It's a 53% gross margin company versus NVIDIA, which is about 75%. The stock is doubled since the end of last quarter. Right. So what's pulled forward? There's the numbers, Brad. Would you be buying after the stock has literally doubled in 4 months right here?
So we don't own AMD. Yeah. We do own a lot of NVIDIA. It's one of our largest positions in the fund. It's been that way since the end of 22. We think AMD will be beneficiaries, particularly the increased inference, which is going to go on, driven by things like Microsoft's Copilot. We do see a lot of ordering out of all the folks we talk to about AMD. But I still think the market leader here, 90+% share, is NVIDIA. So if you want to express that bet, right, which is AI leadership at 25 to 30 times earnings, which is consistent with historical averages for NVIDIA, I think you just own NVIDIA.
I think it was a year or so ago, maybe a little longer, that the CEO of NVIDIA mentioned Taiwan being, I don't want to say an existential risk, but he clearly was concerned. Is that something that worries you, the potential for a China-Taiwan dust-up?
I mean, certainly you have to, I don't think it's in any of our interests to have the fears over a hot war that we had last year, right? The summit which occurred in Silicon Valley between Biden and Xi was welcome. We've seen a lot of interaction, including Jensen going to China recently. So I think that, our concern about that tail risk is less today than it was 6 or 9 months ago. But clearly this is going to continue to be an issue for the United States, right? Gina Raimondo has made clear, that we're not going to sell our most bleeding edge chips to potential adversaries, right, that can be used for military purposes. So I expect they'll have to continue to navigate that. But they've had to continue to navigate that over the course of the last 18 months, Scott. And I don't think there's that much baked into the cake this year. Like, we're not heavily dependent upon some major shift in terms of distribution to China.